Washington believed Canada would hesitate. Thus, they expected sluggish diplomacy, maybe even concessions instead. Canada years. The US had a stranglehold on Canada's energy exports. Practically every drop of crude flowed south. Now that grip is sliding new tariffs, the unimaginable cutting a direct line to China bypassing the US totally, rising tensions and a pipeline permanently altering the rules go beyond just oil. It's about power, and for the first time in decades, Canada is creating her own rules. Energy from Canada was directed into the US. One buyer, one dependency, one danger. But today, the Trans Mountain Pipeline extension delivers 890,000 barrels daily straight to the Pacific, providing Canada access to worldwide markets. China, the most triumphant country. Canada at last breaking free. The US losing influence daily as the world's energy scene changes. With clever diversification of its consumers, Canada is avoiding reliance on a single market. 10% tariff on Canadian oil was the last straw. Washington figured Canada would cover the expenses. Instead, Canada turned east. Why push the US to buy when China is keen to establish long-term deals? Canada spotted an opening, and they took it. Canada has watched as other energy exporters like Russia and Saudi Arabia negotiated long-term energy partnerships with China. Now Canada is doing the same. The $24 billion Trans Mountain Pipeline project changed the equation overnight, more than tripling capacity. It ensures Canadian crude can now flow directly to China, Japan, and Korea. This isn't just about new markets. It's about freedom from US pricing control, and with China importing nearly 50% of its oil through Vancouver's ports. This new route gives Canada direct access to the world's second-largest economy. US refiners are paying extra due to tier tariffs. Meanwhile, China is buying Canadian crude at a discount for Beijing. This is a strategic goldmine, securing a reliable crude supply without Washington's oversight for Canada. This means avoiding heavy discounts that came with selling oil to a US-dominated market. US refineries depend on Canadian heavy crude. They were built for it, but now they're paying more, while China pays less. The US set the tariffs. Now, its own refiners are feeling the squeeze. Some refiners are now pushing the White House to lift tariffs, fearing economic losses and supply chain disruptions. China isn't only buying oil, they're locking in supply for the long haul. Beijing needs energy, security, and Canada's move is an ideal chance. China has been actively diversifying its energy sources, negotiating long-term contracts with nations like Russia, Venezuela, and Iran. Now, Canada joins that list. China's plan isn't just about short-term deals. It's about building lasting trade connections that bypass US influence on the surface. It looks like China simply took advantage of Canada's move. But in reality, Beijing saw this coming, and they were preparing for years. China secretly upgraded its energy infrastructure to minimize its dependence on OPEC and secure various oil sources. Now those investments are paying off. Refinery upgrades. China spent billions upgrading refineries to handle heavier crude, suited for Canada's oil sands. Pipeline development major. Crude pipelines, including the China-Russia ESPO pipeline, were expanded to absorb new supply routes. Port modernization. Important oil terminals like those in Qingda and Dalian have been expanded to handle more incoming shipments. This wasn't an overnight reaction. It was a long-term strategy. And now it's paying off. Before the US had Canada in a stranglehold. Now Canada has options. If Washington tightens restrictions, Canada doesn't have to play along. They have China in their corner now. With newfound leverage is reshaping Canada's whole economic outlook, giving it more bargaining power in future trade negotiations instead of selling at US-controlled pricing. Canada now plays by its own rules. More revenues mean billions put into infrastructure, new pipelines, and energy projects. And for China, cheap, reliable oil, a perfect deal. This action could make Canada's energy sector more competitive on a global basis. boosting exports. Beyond just oil to LNG and other energy sources, could Canada fully suspend shipments to the US? It's doubtful for now, but with new buyers, Canada possesses leverage like never before. If tensions increase, Washington could face a true energy problem. The threat of a Canadian oil supply cut could drive Washington to reassess its trade strategies. Increased oil exports to China mean more tanker traffic, higher emissions, and bigger hazards. Coastal communities are raising concerns. Environmentalists are screaming warnings. To ensure long-term sustainability, Canada must invest in safety measures, enforce strict rules, and develop greener energy alternatives. Washington didn't expect Canada to move this swiftly. Now it's searching for options for decades. Canadian crude was a core piece of US. India has long been dependent on OPEC nations, but with Canadian oil entering the Asian market, it has another supplier to limit its exposure to Middle Eastern price volatility. Energy traders and shipping companies, more petroleum traveling over the Pacific equals higher income for oil traders, tanker operators, and logistics firms managing Canada's exports. This isn't just a Canada-China shift. It's reshaping energy flows across the entire Asia-Pacific region. And for many, it's an opportunity. OPEC is paying notice, and for good reason. China relies heavily on OPEC oil, purchasing millions of barrels a day from Saudi Arabia, Iraq, and the UAE. But now Canada is in the mix. More Canadian oil means China isn't as dependent on the Middle East. OPEC nations may need to lower prices or offer longer-term deals to stay competitive. Russia is also watching. Moscow has built deep energy relations with Beijing, but Canada's expanding prominence might shake up that equation. This isn't just about Canada, China, and the US. It's a global shift. This tilt to China isn't simply a trade move. It's an energy transformation. Canada isn't only selling oil, it's building for the future. The Trans Mountain Pipeline expansion tripled capacity, to 90,000 barrels per day. Now moving west. Newport investments mean more crude can travel to Asia. Faster energy businesses are locking in long-term China contracts, ensuring stability. Canada is doing more than diversifying. It's consolidating its status as a major energy exporter beyond North America for China. This isn't just a good bargain. It's a necessity. Beijing has spent years strategically lowering its dependence on Middle Eastern oil because it knows the risks. Geopolitical instability. The Middle East remains a volatile zone. A conflict or supply disruption could China's energy security. US naval control. Most Middle Eastern oil flows through the Strait of Hormuz, one of the most military waterways in the world, strongly impacted by the US supply chain vulnerability. Relying too much on OPEC nations means China has less pricing power and stability. That's where Canada comes in, a politically stable provider. No conflict zones, no unpredictable embargoes, a direct Pacific shipping route. No reliance on contentious choke points. Heavy crude for China's improved refineries. Perfect fit. This isn't just about price. It's about safeguarding the future. And China. It just found the best energy partner. Selling oil to China makes economic sense, but politically it's complicated. For years, Canada tried to balance connections between the US and China. Now it's making direct energy deals with Beijing. The US remains a vital trade partner, but Ottawa is no longer dependent on it. China's rising influence in Canada's economy creates questions in Washington. Internal political debates over the environment, trade security, and foreign policy are heating up. Canada isn't taking sides. It's playing its own game. But that game, it's reshaping the energy landscape. This isn't just a shift in oil markets. It's a power shift. Canada gains economic strength, more buyers, more influence. China diversifies its supply, less op reliance, more leverage. The US faces an energy challenge, continually buying Canadian oil, but without the same control. For years, Canada oil trading was predictable. Now it's altering the rules. This isn't just a new oil route. It's a turning point. Canada's oil trade with China isn't just a business deal. It's a geopolitical shift. The US is recalculating its next moves. OPEC is watching attentively. China is ensuring its future energy supply, and Canada. It's becoming a global energy player on its own terms. This isn't a temporary adjustment. This is the new energy reality. The question now, who moves next? Because Canada, it's already ahead. Major moves are happening, and this is only one of them. Make sure you're locked in. Subscribe now, and as always, we'll see you in the next one.